Bitcoin's evolution from a mysterious white paper in 2008 to a financial sensation in this year has been nothing short of revolutionary. Its journey is filled with drama, suspense, and the thrill of pioneering a new form of money. Buckle up as we dive into this crypto adventure and uncover the secrets behind Bitcoin's meteoric rise. The Genesis block, a mysterious birth. Bitcoin's launch in 2009 wasn't just the start of a cryptocurrency. It was the beginning of an entirely new financial ideology. The Genesis block included the message. The Times 03 January 2009 Chancellor on brink of second bailout for banks, highlighting discontent with traditional financial institutions during the 2008 financial crisis. This subtle commentary suggested Bitcoin's mission, a monetary system independent of banks or government influence. While Nakamoto's identity remains a mystery, his or her vision was revolutionary, promoting a decentralized, transparent financial system based on peer-to-peer networks and cryptographic proof rather than trust. Bitcoin's limited supply, capped at 21 million coins, was another radical feature, contrasting with fiat currencies, which can be printed at will by central banks. The ambiguity surrounding Nakamoto's identity has fueled much debate and myth, making Bitcoin's origin story one of the most discussed mysteries in modern finance. The Wild West of early adoption. Bitcoin's early years were turbulent and fascinating, marked by experimental usage and ethical ambiguity. Originally seen as an internet curiosity, it quickly became popular among those interested in privacy and financial autonomy. Dark websites like Silk Road used Bitcoin as a primary payment method, which made it popular for pseudonymous transactions, including illegal ones. However, this Wild West period spurred awareness, and by 2013, Bitcoin's price reached $1,000 due to growing demand in legal markets like online commerce and remittances. As news outlets began covering Bitcoin's soaring value and blockchain technology's potential, it captured the interest of the public and major financial players. In 2017, Bitcoin's price surged to an unprecedented $20,000, attracting millions of new users and sparking regulatory discussions worldwide. This period shaped Bitcoin's reputation as both an innovative financial tool and a volatile, risky asset. A new breed of investor. Bitcoin's allure in 2024. Bitcoin's investor demographic is broader and more diverse than ever. Traditionally dominated by tech-savvy early adopters and libertarians, Bitcoin now attracts a wide array of retail investors, institutional stakeholders, and even governmental entities exploring it as a potential reserve asset. With giants like BlackRock and Fidelity integrating Bitcoin ETFs, institutional interest has surged by 60% since 2023. Bitcoin has shifted from a speculative asset to one seen as a strategic portfolio hedge, particularly against inflation and fiat currency instability. This broadened appeal has led Bitcoin's price to stabilize somewhat, though it remains volatile. A new generation of young investors, wary of traditional financial systems and inspired by the decentralization ethos, sees Bitcoin as more than an investment. It's a statement of financial sovereignty and resilience against economic crises. Bitcoin ETFs, institutional blessings and curses. The introduction of Bitcoin ETFs, especially in the US, has significantly increased Bitcoin's accessibility. ETFs allow investors to buy into Bitcoin without handling the complexities of private keys or cryptocurrency exchanges, providing a more traditional investment experience. In October 2024, a record $555 million was invested in Bitcoin ETFs in just one day, underscoring their appeal to conservative investors who prefer regulated channels. Yet the entrance of these large funds raises concerns about Bitcoin's decentralization. Institutional investment might lead to centralized control, undermining Bitcoin's foundational values of independence and censorship resistance. This shift brings Bitcoin into mainstream finance, but poses the risk of regulatory overreach, as financial giants may push for influence over Bitcoin's market dynamics to protect their interests. Digital gold. Bitcoin as a hedge against inflation. Bitcoin's appeal as digital gold has gained traction over the years, especially in 2024, as it proves resilient in times of inflation and economic uncertainty. The unique structure of Bitcoin, capped at 21 million coins, has given it deflationary properties, contrasting sharply with fiat currencies that central banks can print in response to economic pressures. This year, with inflationary concerns mounting globally, central banks in the US and Europe have increased interest rates to stabilize economies. Bitcoin, as a limited supply asset, serves as an alternative store of value much like gold, which is traditionally seen as a hedge during inflationary periods. Additionally, Bitcoin's annualized inflation rate now sits below 2% due to the scheduled reduction in mining rewards, making it even more attractive to investors wary of fiat's eroding value. Bitcoin's role as a complementary asset to gold has grown, with institutional investors treating both as stores of value and safe havens against currency devaluation. For instance, as the US dollar's purchasing power declines due to inflation, Bitcoin's price appreciation, tied to its scarcity, becomes increasingly appealing to both retail and institutional investors. This trend aligns with younger, inflation-wary investors who are interested in decentralized assets. Despite its volatility, Bitcoin's performance over the past decade has shown better returns than traditional assets like gold, leading to its role as a modern inflation hedge for those diversifying their portfolios with alternative assets that could potentially outperform fiat-based holdings. Scarcity effect: the impact of Bitcoin's supply crunch. The scarcity of Bitcoin is a core element that underpins its long-term value and price stability, particularly with only 21 million Bitcoins ever available. Bitcoin's supply is inherently limited, leading to a noticeable supply crunch as demand rises. As of 2024, the amount of Bitcoin held on exchanges has dropped to a 5-year low, an indicator that investors are increasingly choosing to hold onto their Bitcoin rather than trade it on exchanges. This trend reflects a shared expectation of future price appreciation, partly fueled by upcoming halving events that reduce Bitcoin mining rewards, making it even scarcer. This scarcity effect has a profound impact on market dynamics. The reduced availability of Bitcoin creates a favorable supply-demand balance, often supporting price growth during periods of heightened investor interest. Data from InTotalBlock highlights that approximately 40% of Bitcoin's total supply hasn't moved in over a year, indicating a long-term commitment from investors who view it as a store of value. As Bitcoin becomes harder to obtain, its value as a hedge against economic instability increases, further attracting those who see it as a protection against inflation and currency devaluation. In times of economic uncertainty, the allure of Bitcoin's finite supply continues to appeal, driving demand and influencing both short and long-term price dynamics. Mining and the halving cycle, a price catalyst. Bitcoin's unique reward halving cycle is a built-in mechanism that slows its supply growth every 4 years. The most recent halving in 2024 reduced the block reward from 6.25 to 3.125 Bitcoin, making Bitcoin even scarcer and potentially boosting its price. Historically, halvings have correlated with subsequent price increases as decreased supply and steady demand lead to scarcity effects. Miners are now facing higher competition, incentivizing the adoption of efficient, sustainable energy solutions, which in turn strengthens Bitcoin's environmental narrative and appeals to eco-conscious investors. Market watchers are betting on another potential price rally, anticipating a bull market similar to those following previous halvings. The dark side: hacks, scams, and controversies. Despite its growth, Bitcoin's journey has been marred by scandals, hacks, and scams. The 2014 BT Gox hack, which saw 850,000 Bitcoin vanish, remains one of the most notorious incidents. Even as security protocols improve, crypto-related scams have surged, with October 2024 witnessing several fraud attempts targeting new Bitcoin ETF investors. These incidents reveal the ecosystem's vulnerability, especially with increasing institutional and retail interest. Although blockchain technology is secure, exchanges and wallets remain susceptible, underscoring the importance of vigilance and robust cybersecurity measures in the industry. Environmental concerns, a heated debate. Bitcoin mining's energy consumption has sparked intense debates, especially in 2024 as environmental awareness grows globally. Critics argue that Bitcoin's carbon footprint is unsustainable, with mining activities consuming more energy annually than some small nations. In response, many mining operations are shifting to renewable energy sources such as hydropower and solar, particularly in regions like Texas and Canada where clean energy is abundant. Bitcoin advocates assert that green mining practices can mitigate its environmental impact, but the debate continues as regulators weigh in on the feasibility of sustainable crypto mining. The future, Bitcoin's next big chapter. With projections suggesting Bitcoin could reach six-figure prices in the coming years, its future remains a hot topic. Analysts estimate that Bitcoin's price could peak between $100,000 and $250,000 during the next bull cycle, driven by the halving and increased institutional support. However, regulatory uncertainties, environmental challenges, and potential technological advancements all present obstacles. For now, Bitcoin is firmly embedded in the global financial ecosystem, but whether it will fully replace traditional money or remain an alternative store of value is a question that keeps analysts and investors intrigued. Thanks for joining us on this deep dive into Bitcoin's incredible journey from its mysterious beginnings to its role as digital gold. If you found this video insightful, don't forget to hit that like button and subscribe to our channel. Tap the bell icon so you won't miss any of our future content. Let us know in the comments your thoughts on Bitcoin as a hedge against inflation. See you in the next video.